Broadcast this evening from the floor of the New York Stock Exchange. Wild ride, the wildest day in the history of the market at the end of the wildest week. And now what next in this worsening financial mess? Rough road. Could General Motors really go out of business? Not if they can help it. Today, they launched an effort to save a great name and keep building cars and trucks. Getting the message, the presidential candidates bear down on one issue above all. It's the economy. Giving peace a chance, starting a new life at the height of your life, and making a difference in the process. Nightly News begins now.
This is NBC Nightly News with Brian Williams.
And good evening on this Friday night from the floor of the New York Stock Exchange. This place alone isn't the reason for this financial crisis, but they sure do feel it here. This was the worst week ever for the market, and this was the wildest single day in the history of Wall Street. The Dow swung back and forth 1,000 points just today alone. After 7 minutes of trading this morning, it was down more than 683 points. Then it went up 955 points. Then when the Dow finished down 128 points today, that made today the best day of this awful week. Markets around the world are coming off the worst week since the crash of 1929. Finance ministers from around the world are in Washington. They're trying to figure out how to stabilize the world's banking system as we head into another weekend of uncertainty. We are here with members of our team tonight. We begin with our own Carl Quintanilla, and I can't believe we're talking about another bad day.
It could have been a lot worse, Brian. In fact, for a while today, it was a lot worse. All those lingering fears about a market crash collided with the hope that central bankers around the world have another rescue plan up their sleeves. Closing out the Dow's worst week in history today, some relief.
There it is, the unexpected restaurant has just turned positive.
Zipping in and out of positive territory after a global sell-off that started in Tokyo, saw trading halted in Russia, Italy, and Iceland, and continued with more selling in London and Paris. Markets are nervous but hopeful that G7 finance ministers meeting in Washington this weekend will roll out a global plan to make banks less afraid to lend to each other, something they've resisted despite multiple plans to bail them out.
I don't think it's going to be easy, but they need to do something in unison to reassure not the stock market, but to get that credit market moving again.
Why did the market sell off so much this week? One reason, hedge fund and mutual fund clients want their money back. But to pay them, fund managers have to raise cash by selling stocks they might otherwise keep. McDonald's, IBM, ExxonMobil have all fallen, even oil itself, now under 80, a one-year low. While gas prices may not follow, analysts say oil could go to $40, maybe $30 a barrel.
I'm not even ruling out 20 because this market always moves further and faster than we expect it to.
Long term, the U.S. economy hasn't even begun to feel the effects of the credit crunch. Some fear we may be in for a bleak decade like the 1930s or the 70s. Others worry baby boomers, having made money in stocks for years, will leave the market for good, creating less demand for stocks, making them less lucrative investments for years to come.
The idea that just by putting your money in an index fund, you're going to be safe from any downturns is just a myth that's going to be exploded by the reality that we're seeing.
3, 2.
One reason today's sell-off was mild. Some traders who've been betting that stocks would go down stopped making those bets, Brian. With so much uncertainty going into this weekend, they all want to keep their powder dry and see what happens.
As we mentioned, top of the broadcast, hard to believe it's another uncertain weekend. Carl Quintanilla, thanks as always. We mentioned Washington here tonight. That's where some of this attention starts to shift. Finance ministers from around the world are meeting this weekend to try to come up with a coordinated response to this meltdown. Our chief White House correspondent, David Gregory, is with us from the White House lawn tonight. David, good evening.
Brian, the president tried again today to confront this outright fear in the financial markets and the mounting frustration with leaders here in Washington and around the world. Many people wondering just who is going to lead us out of this crisis.
This morning, as stock prices again plunged on Wall Street and around the world, the president emerged to declare the week's stock market meltdown, quote, startling.
This uncertainty has led to anxiety among our people. In And that is understandable. But anxiety can feed anxiety. And that can make it hard to see all that is being done to solve the problem.
Mr. Bush pleaded for
The
patience.
federal government has a comprehensive strategy and the tools necessary to address the challenges in our economy. Fellow citizens, we can solve this crisis, and we will.
Despite criticism that the administration missed the warning signs of the financial unraveling and has been slow to take corrective steps, the president defended the administration's approach, which officials now say will likely include the government making direct investments into struggling U.S. banks.
The plan we are executing is aggressive. It is the right plan. It will take time to have its full impact.
In an effort to show greater international coordination, Treasury Secretary Hank Paulson and Fed Chairman Ben Bernanke met with their counterparts from the world's 6 other richest countries. In a communique released late today, the governments agreed to coordinate efforts to provide capital to failing banks, to free up short-term lending between banks and businesses, and to work jointly towards shoring up mortgage markets.
Obviously, there's been a lot of criticism and recrimination against the U.S. From Europe. Maybe they're past that now because they've recognized they've got their own serious problems.
And the key to all of this coordinated action, it's worth underlining a couple of developments tonight. One, that is that the administration is preparing to make direct investments into struggling U.S. banks, in addition to some of these other measures like buying this bad debt that has been discussed. Also, President Bush will meet with those finance ministers, the G7 finance ministers, at a special meeting here at the White House. Brian, the big question, though, can a lame duck president, lame duck administration, have enough influence to really change the direction of this crisis?
All right, our chief White House correspondent, David Gray.